All right, welcome to Talk Tickers. Today, we are diving into FB Financial. That's ticker FBK. They just dropped a monster of a quarter, and we're going to unpack exactly how a single, smart merger completely supercharged their business. So, the market definitely liked what it saw. The stock popped about 4% on the day. And the reason for all that excitement? It really comes down to this one massive number, a 94% year-over-year revenue surge. I mean, wow. When you see a regional bank almost double its revenue in just 1 year, you have to ask, how on earth did they pull that off? And maybe more importantly, is this a one-time thing, or can they actually keep this momentum going? Let's get into it. Okay, so first things first, let's look at the headline numbers. And what you see here is a clean beat right across the board. Wall Street loves a simple, easy to understand story, and that is exactly what FB Financial gave them. So, adjusted earnings per share came in at $1.07. That's a solid 4 cents ahead of what the analysts were expecting. And on the revenue side, they beat by a healthy 3%. Just a really straightforward, no drama, positive result that investors love to see. So, the big question, how did they get that huge revenue jump? Well, the answer is actually pretty simple, and it's all about one transformative deal, their merger with Southern States Bancshares, which officially closed on July 1st. Now, this wasn't just some small tweak. This was a fundamental step change for the entire company. And you can see the impact almost overnight. I mean, look at this. The deal added some serious scale, boosting their loans by almost 25% and their deposits by over 21%. And that's in a single quarter. This is what buying a multi-billion-dollar bank does for you. But here's the real magic. It wasn't just about getting bigger, right? It was about getting way more profitable. By bringing in Southern States' higher-yielding loans, they were able to expand their net interest margin, which is really the core profit metric for a bank, by a huge 27 basis points. That pushed it all the way up to 3.95%. That's a big deal. And all those benefits flowed directly to the bottom line. This merger fueled a 38% jump in their core earnings power. And at the same time, they actually got more efficient, which means it cost them less money to make every dollar of revenue. It's that classic 1 + 1 = 3 situation that you always hope for in a merger. A great quarter is fantastic, but Wall Street is always asking, okay, but what have you done for me lately? So let's take a look at management's roadmap to see if this incredible performance can actually last. And the outlook looks pretty solid. Management is guiding for that really powerful profit margin to hold steady, which is great news. On top of that, they're planning to get back to their normal, strong pace of organic loan growth. Basically, they're signaling that the huge gains they got from this merger are here to stay. And what was really interesting, during the Q&A part of the earnings call, the CEO, Chris Holmes, basically signaled they're hungry for more. He said they're leaning into M&A because they see a big opportunity right now, specifically targeting banks in that $3 to $7 billion range. The takeaway? They are not done growing, not by a long shot. So let's put it all together. After a quarter like this, what's our call on FB Financial? Where does the story go from here? Well, for us, the investment case from here really boils down to 3 key things to watch on the next call. First, can they protect those amazing profit margins? Second, are they going to deliver on all the cost savings they promised from the deal? And third, as they finish integrating these 2 banks, how does the credit quality of the combined loan book hold up? The answers to those questions will really tell us where the stock is headed. So, with all that in mind, our rating is outperform. The Southern States merger was, without a doubt, a home run. It gave them immediate scale and a much higher, more sustainable path for earnings. Management has done a great job on the execution so far, and they've laid out a really credible and confident plan for what comes next. This is not financial advice.